Pound sterling to US dollar is sitting directly under key moving averages with TWO central bank decisions in 5 days. Wednesday's Fed could see a 10-2 hawkish split. Thursday's BoE holds at 3.75% with a 7-2 vote. The dollar killers are in a policy divergence war. The 1.3368 weekly pivot is the danger zone. Below it, we are targeting 1.3180 freefall. Above it, the whole structure resets. Pound sterling to US dollar at 1.3342. The weekly trend is a strong sell. The daily trend is a strong sell. And yet, the pair is consolidating directly beneath a cluster of key moving averages, waiting for the fuse. This week has one danger zone and one 3 to 5 day opportunity. I'll show you both right now. Here's what the herd doesn't see yet. The 1.3368 weekly pivot is the single most important level on the entire chart. Below it, we are in freefall toward 1.3180. Above it, the entire monthly structure resets. And with the Federal Reserve on Wednesday and the Bank of England on Thursday, back to back, this is the most explosive week for cable since March. Stay to the end. I'm giving you 2 Monday scalps and 1 swing trade that can run the next 3 to 5 days. The 3 to 5 day structural bias is selling into rallies with a bearish invalidation at the weekly pivot. Let me be crystal clear. The weekly trend is strong sell, the daily trend is strong sell, and the 4H is sell. The only neutral timeframe is the 1H, and that's just Monday morning consolidation before the real move. Write this number down, 1.3368. That's the weekly pivot. If this level breaks and holds this week, the whole monthly structure resets and we're looking at 1.3438, then 1.3482. But if we stay below it, and the technicals suggest we do, we are targeting 1.3298, then 1.3254, then 1.3184. Here's where the herd is positioned coming into the week. CFTC data shows GBP non-commercial net positions improved to minus 55.6k contracts from minus 71.3k previously. That's a 4th straight week of short covering. But here's the kicker. Sterling still slipped 0.13% despite that covering. That tells me the unwind is losing conviction. The institutions are reducing their shorts, but the price isn't rallying. That's a massive red flag for anyone leaning too hard into a bullish reversal this week. Let's navigate the chart from the weekly down to the 60-minute weekly time frame. The weekly MACD is showing bearish momentum with a fast line below the signal. The 200-week MA sits at 1.3063. That's the structural floor. Above it, the 100-week at 1.3202 is your first major weekly support. The weekly trend is strong sell, and that's your macro pulse for the next 5 days. Until the weekly MACD crosses back above the signal line, every rally is a selling opportunity. Daily time frame. This is where it gets interesting. Price is at 1.3342, and the daily MA20 is at 1.3380, MA50 at 1.3345, and MA200 at 1.3063. Look at that. We are directly under the MA20 and MA50. The daily RSI is 47.78, neutral but leaning bearish. The daily MACD is at minus 0.002, basically flat but negative. The ADX at 32.43 tells me the trend is intact but not overextended. We have room to run lower. 4H timeframe. The 4H trend is sell. Price has been making lower highs since the 1.3520 double top structure. The 4H MA20 is acting as dynamic resistance, and each rejection is getting sharper. The CCI at minus 66.03 is approaching oversold but hasn't hit the extreme minus 100 yet. There's still downside fuel. 60-minute, neutral. Monday's Asian and early London session is consolidating. The Williams %R at minus 62.18 is mid-range. This is the calm before the storm. Here's what most traders will miss until Wednesday. The 1.3298 level. That's S1. It's also the low from last Thursday. If we break that, the stops below it trigger a cascade down to 1.3254, then 1.3184. And here's the cross-asset linkage. Watch DXY. If the dollar index holds above 101.2125, pound sterling to US dollar has no business rallying. The dollar recovery is approaching downtrend resistance, and if it breaks higher, cable gets crushed. This week isn't just about technicals, it's about the most consequential central bank week since March, Wednesday, July 29th, 8 p.m. Eastern Standard Time, the Federal Reserve interest rate decision. The consensus is a hold at 3.50% to 3.75%. But here's the catch. Fed funds futures are pricing in 38% odds of a 25 BPS hike. The base case is a 10-2 vote split with Hammack and Logan dissenting for a hike. But there's a risk of 9-3 if Cook joins them. That's a hawkish hold, and a hawkish hold is dollar positive. The Fed's rhetoric matters more than the actual decision. If Powell signals rates stay higher for longer, USD rallies and pound sterling to US dollar breaks lower, Thursday, July 30th, 7 a.m. Eastern Standard Time, the Bank of England rate decision. Expected to hold at 3.75% with a 7-2 vote split. The OIS market has priced in a 58% chance of a BoE hike before the Federation. But BBH argues the BoE's vote split should remain 7-2 in favour of no change. The less worrisome UK inflation backdrop gives the BoE room to stand pat. A dovish hold, or a split that leans more dovish, is sterling negative, Thursday, 2:30 p.m. Eastern Standard Time. US advanced Q2 GDP expected at 1.9% WOI. The Atlanta Fed GDP now is at 1.7%, the New York Fed at 2.8%. A print above 2% is dollar positive. Weekly jobless claims will add volatility, Friday, 2:30 p.m. Eastern Standard Time. US core PCE expected at 0.2% MOM. This is the Fed's favorite inflation gauge. A hot print locks in hawkish Fed expectations through year-end. Here's the narrative web for the next 3 to 5 days. Monday and Tuesday are technical consolidation. Wednesday's Fed sets the weekly tone. Hawkish hold equals dollar bids. Thursday's BoE is the sterling wildcard. Friday's PCE is the final nail. The 1 to 2 week directional lean is bearish as long as we stay below 1.3368. The exact event that invalidates it? A dovish Fed surprise or a BoE hike. But I'm not betting on either. Do you think the dollar closes above 105 this Friday? Comment yes or no. I'm tracking consensus for the week. Most people skip the planning phase. That's exactly where this week's money is made. Keep watching Strategy 1. The Monday opening scalping, high probability, entry. 1.3310 breakdown on a confirmed 15-minute candle close below the level. This is the bearish trigger from the 24-hour intraday strategy. Alternatively, if price rejects 1.3360 and prints a bearish 15-minute candle stop loss, 1.3340, tight, just above the current consolidation range, take profit 1. 1.3265. The 4H support from last week risk a reward. 1:1.5 a minimum. What voids it? If the 15-minute candle closes back above 1.3340, the setup is invalid. Also, only execute during London Open, 3 a.m. Eastern Standard Time, or New York Open, 8:30 a.m. Eastern Standard Time, for liquidity. Cut the trade instantly if structural indicators flatten. This is a snipe, in and out. The first 1 to 3 hours of Monday's session offer the cleanest price action before the institutional algos fully engage. The Monday opening SCALP entry, 1.3310, 15M bearish breakout, OR 1.3360 rejection stop loss, 1.3340 take profit 1, 1.3265 risk, reward, 1:1.5 R invalidation, 15M close above 1.3340 strategy 2. The Monday liquidity grab, scalping, counternoise, entry, by a structural support failure rejection at 1.3315. This is the counterintuitive play. You're buying the fake breakdown. The stop-on zone is just below Friday's low at 1.3298. If price sweeps that level and snaps back above 1.3315 with a 5-minute bullish close, you enter long stop loss, 1.3290, just below the stop hunt wick, take profit 1, 1.3410. the premium supply zone risk A reward, 1:2.5 a dot warning. This requires aggressive execution. You need to be watching the 1-minute and 5-minute charts in real time. The liquidity grab is designed to catch the stops below S1, then reverse violently. If the snapback doesn't happen within 3 candles of the sweep, the setup is dead. Are you scalping Monday or swinging the week? Comment scalp or swing. Let's see who's built for this market. The second strategy, entry, 1.3315, 5M bullish reclaim after S1 sweep, stop loss, 1.3290 take profit 1, 1.3410 risk, reward, 1:2.5 R invalidation, 5M candle closes below 1.3290 strategy 3, the 3 to 5 day swing, trend alignment. This is the big one. The one designed to capture the core move of the entire week, entry. Sell limit orders within the premium supply pocket spanning 1.3410 to 1.3460. Scale into the position, 1/3 at 1.3410, 1/3 at 1.3438, 1/3 at 1.3460. The structural double top near 1.3520 makes shorting relief rallies the optimal structural play, stop loss, 1.3535, just above the structural double top. This is your invalidation level, take profit 1, 1.3180, the primary swing target, which aligns with the key demand level, take profit 2, 1.3050, the stretch target if the bow turns dovish or the Fed turns ultra-hawkish risk A reward, approximately 1:3.8 R from the 1.3410 entry to 1.3180 TP1. Trailing stop rule. Once price reaches halfway to TP1, around 1.3295, move stop to break even, explicit invalidation. A daily close above 1.3535 negates the entire weekly outlook. Also, completely close or secure all open swing parameters to break even prior to Wednesday's FOMC announcement. This swing trade is designed to hold through the volatility. Wednesday and Thursday will test your conviction. But that's where the 1:4R payoff lives, entry. Scale sell 1.3410, 1.3438, 1.3460 stop loss, 1.3535 take profit 1, 1.3180 take profit 2, 1.3050 risk, reward, (1:3.8 R, from 1.3410 entry, invalidation, daily close above 1.3535. Close as secure all positions pre-FOMC Wednesday, never risk more than 1 to 2% per trade. Holding through high-impact event days like Wednesday and Thursday requires tighter sizing. I'd recommend 50% of your normal position size for the swing. Stops are non-negotiable, especially on the swing. This is how you survive to trade the next big weekly move. Let me summarize the single most critical level to watch for the entire week, 1.3368. That's the weekly pivot. Below it, the path of least resistance is down. First to 1.3298, then 1.3254, then 1.3184. Above it, the bulls take control and we test 1.3438 and 1.3482 if this level breaks on Friday. And I mean really breaks, with a daily close above it, the whole monthly trend flips. But if we close the week below 1.3298, that 1.3180 target is almost guaranteed. If you want the full breakdown on Aussie dollar, Japanese yen, Nike 225, those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Tap the end screen to jump to the gold melt-up analysis and then loop back to today's Nasdaq Gamma flip later. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that define your week.